Did you know prior to 2012, brokers were only required to report the proceeds from sales on 1099-B? Oftentimes, the cost basis for trades was missing completely, leaving it entirely to investors and traders to keep track of the cost basis, make wash sale adjustments, and calculate capital gains and losses. Then the IRS regulations changed, and brokers began providing 1099-B with cost basis, sale proceeds, and wash sale adjustments. Why the change? Was it because they wanted to make tax time easier for traders like you? Or was there something more behind it? As we shine the spotlight on 1099-B, we'll answer those questions and explain the ultimate question traders want to know. Can I rely on my 1099-B for this year's tax reporting? Hi, I'm Jason with TradeLog. In this video, I'll explain what traders need to know about the 1099-B, including two key problems. Let's start by explaining its purpose and what you can expect to see reported. 1099-B is an IRS form to report proceeds from broker and barter exchange transactions. Brokers are required to file this for anyone who engaged in transactions involving the sale of securities or similar financial instruments. Now, rather than providing hundreds, even thousands of individual forms, brokers usually provide a substitute statement, which consolidates the information reported. Each broker's 1099-B statement may look a little different, but here's an example of what you will typically find. The statement may also report other tax information such as dividends, miscellaneous interest income. Often you'll see a summary page at the beginning or end of the 1099-B details, breaking down the required sections: short-term, long-term, or undetermined holding periods, and then whether basis is reported to the IRS or not. The totals on the summary may throw you for a loop. We'll come back to that later. You may also see a segment for Section 1256 contracts. These are futures and broad-based index options that qualify for special treatment. Brokers vary in which contracts they report as 1256. Sometimes your 1099-B may cause you to lose out on that preferential treatment, but that's a subject for a separate video. Let's focus on stocks and options. The details section for stocks and options may differ depending on the broker. Often they'll group trades by CUSIP. The description format may also differ by broker, but you should have quantity, date acquired, date sold, proceeds, and cost basis. Usually there is a column for adjustments, and they'll flag if it's a wash sale or other type of adjustment. Gain or loss on individual lines is not required, but may be provided. There may be other additional information as well. As mentioned in the outset, before 2012, the 1099-B only reported sale proceeds. Of course, with only half the needed information to calculate gain or loss, it wasn't very helpful to either taxpayers or the IRS, which brings us to the reason the 1099-B was changed. You might think Uncle Sam just wanted to help you out by making sure brokers provide a simple form you could use for tax filing. But think again. A 2006 report by the GAO highlighted an $11 billion tax gap in 2001 alone because of unpaid capital gains taxes. The GAO recommended Congress require brokers to report the adjusted basis of securities along with sale proceeds. While they hoped this would help taxpayers accurately report capital gains taxes, it was all about trying to close that gap and collect more tax revenue. And so, in 2008, Congress passed legislation to do just that, beginning a staged implementation of cost basis reporting requirements starting with the 2011 tax year. Did it close the gap? More on that later. But understanding the motive behind the 1099-B cost basis can help you keep things in perspective. The big question you may wonder, can I simply use my 1099-B to directly report my trading gains or losses? Possibly, but it depends on your situation. And this brings us to two big problems you need to understand about the 1099-B. First, while brokers are required to make wash sale adjustments on 1099-B, their requirements are different than the requirements for you as a taxpayer. If you've watched our videos about the IRS wash sale rule, you know wash sales get really complicated. It's impossible for brokers to make comprehensive wash sale adjustments, and so the IRS only requires them to adjust wash sales within a single account for identical CUSIP. However, you are required to adjust wash sales across all accounts between substantially identical securities, including stocks and options, and even with IRA trades. Here's an example. This trader's primary account was with a major broker, but they also have other accounts, including one with a different broker. Their primary broker adjusted wash sales on Meta throughout the year, but only within the account. But we noticed the trader also had significant losses on Meta in their other brokerage account. No wash sales occurred within that account because they sold all the shares at once. But are there replacements made in the primary account that would trigger wash sale adjustments on these losses? The trader has to figure that out. To take it a step further, even within the primary account, this trader also traded options on Meta. The broker is only required to make wash sale adjustments on identical option tickers, yet the IRS rules imply there could be wash sales across substantially identical contracts and even between stock and option trades. IRS regulations make it clear you cannot deduct a loss from a wash sale even if it is not reported on Form 1099-B. So the IRS expects you to account for these additional wash sales in your reporting. How do you do that? This brings us to our second problem. IRS instructions imply you can simply take your 1099-B and make additional adjustments. But the 1099-B usually doesn't provide the details needed for taxpayers to make those additional adjustments. Here's an example using the same situation we just mentioned. In the secondary account, we have $28,000 in losses for 1,000 shares sold on December 29th. Did we replace any of those shares in the primary account within 30 days before or after? Going to our 1099, we look for any shares acquired on or after November 29th. But notice the 1099-B reports the date acquired for most lines as various. Now they're allowed to do that, but it sure doesn't help with our situation. Here we do see 4,000 shares acquired on December 5th. It's possible this could trigger a wash sale. But now I need to know, did this purchase already get adjusted as part of a wash sale in this account? We can see there are many wash sale adjustments within 30 days of that date, so it's possible. But the 1099-B provides no detail about which replacement was adjusted by the wash sales. It's also possible for there to be a replacement in January of the next tax year, but the 1099-B doesn't list any of those trades or adjustments. So it's nearly impossible to follow the IRS instructions for making additional wash sale adjustments using the 1099-B. In fact, the lack of detail can also make it impossible to verify or reconcile what the broker reported. If we wanted to verify each of these wash sale adjustments independently, how would we do that? We don't know where the adjustment is made to, nor do we have all the dates or unadjusted cost basis information. A fundamental principle of good accounting is to have verifiable reporting. The inability to verify 1099-B makes it problematic and downright confusing. For example, maybe you, like many traders, have been shocked when you saw the total disallowed losses reported on 1099-B, thinking that amount is completely disallowed for the tax year. But that total is simply a total of column 1G, listing all individual wash sale adjustments, most of which were likely adjusted into the cost basis of replacement positions already closed and realized in the tax year. But can you know which cost basis amounts have been adjusted and by how much? No. Do you know the exact amount of wash sale losses that were deferred to the next tax year because a wash sale was adjusted to a position held open or to a January trade? No. You just have to trust your broker did everything correct, and you have absolutely no control over how or what they adjust. Now, surely the systems used by brokers to spit out thousands of 1099-Bs would never make a mistake, and they're working in your best interest, right? As you can see, your 1099-B may not be the clear-cut trader tax reporting solution you thought. For many of you serious traders with multiple accounts or trading stocks and options, there's a good chance you must make additional adjustments not reported on the 1099-B. We've provided helpful information on the education section of tradelog.com to help you determine whether you can use your 1099-B directly. For example, if you trade the same securities in more than one account, including IRAs, or if you trade options, then you likely must check for additional wash sale adjustments not made by brokers. If you only trade stocks in a single account, then you may be able to directly use your 1099-B if you don't care how your broker makes wash sale adjustments. What do I mean by that? How your broker makes wash sale adjustments? Here at TradeLog, we've examined hundreds of 1099-B reports each year, and there's something we've noticed. Often, the way the wash sale rule is applied may not be to your benefit. For example, the wash sale rule says the replacement window begins 30 days before a loss and ends 30 days after. Yet, rarely do we see a 1099-B adjust a wash sale to a potential replacement within that minus 30-day period. Why does it matter? Now, it's true, the 1099-B preference for a plus 30-day trade is legal. But if the wash sale is always pushed forward, there's a higher chance it will snowball and get deferred to the next tax year and may unreasonably increase taxable gains. Some CPAs call this phantom income, and nobody likes paying more taxes than necessary. One more thing. If you are a trader who has elected Section 475F, trader tax status, you now use the mark-to-market accounting method and treat your trading gains and losses as ordinary income. The problem is the 1099-B has no mechanism for reporting with this method. Now, some brokers, if informed by the trader, will generate a 1099-B with no wash sales, but it doesn't have the needed mark-to-market adjustments for the start and end of the year, making it almost useless for tax reporting. Let's review what we've learned about the 1099-B. 1099-B statements provide the IRS with information about the activity of investors and traders. While less active investors can likely use the 1099-B to directly report their trades, for more active traders with multiple accounts or who trade stocks and options, additional adjustments are likely needed because the IRS requires taxpayers to make more comprehensive wash sale adjustments than required by brokers. Sadly, the 1099-B reports activity and adjustments in a way that usually cannot be verified or reconciled, let alone used to accurately make any additional adjustments required. For accounting purposes, this is bad data. The 1099-B may even inflate taxable gains from the way the wash sale rule is applied, and 1099-B doesn't provide mark-to-market accounting for those with trader tax status. At the outset, we explained the intention of 1099-B changes over a decade ago were ultimately to close the tax gap, allowing the federal government to collect tax revenue owed from trading activities. Did it work? In 2001, the capital gains tax gap was estimated at $11 billion. In 2021, it was estimated at $53 billion. Will congressional leaders make further adjustments to try to fix the flaws in reporting, or will the IRS try to further crack down, perhaps with increased audits of capital gains reporting? Time will tell. But what you can do now is take control of your trader taxes and generate IRS-ready reporting that's compliant, verifiable, and accurate, all while trying to keep your tax bill down. And that's where TradeLog is designed to help traders. TradeLog's intelligent application doesn't use 1099-B data because of the flaws mentioned. Instead, TradeLog uses your actual trade history to generate independent, IRS-ready tax reporting. TradeLog applies the IRS rules for traders to comply with wash sale regulations, Section 1256 treatment, and more. TradeLog tries to reduce tax liability if legally possible within the IRS rules, but the resulting reporting will give you a clear picture of wash sale effects with a verifiable audit trail for each adjustment if needed. TradeLog also handles the mark-to-market reporting needs for Section 475 trader tax status. TradeLog's reporting has been accepted by the IRS for nearly 25 years and is trusted by leading trader tax CPAs. You can find out for yourself if TradeLog is right for you. Get started with a free trial at tradelog.com. And if you want to learn more about trader taxes and other trader topics, check out the free education section at tradelog.com and other videos on our YouTube channel. Thanks for watching, and I'll see you next time.